This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Chapter 3, Double Entry Bookkeeping. Now, to explain what's happening here, I'm going to go straight to the example. So you have a read yourself later through page 15 and the top of page 16. But I'll explain what's happening with example 1, which is on page 16. So, read it with me. It says, the following are the transactions of Christine's business during the first month of trading. And we've got a list there of, 10 transactions. Now, in Chapter 2, we went through transactions like this, with each one in turn looking at the effect on the business and effectively doing a statement of financial position at each stage. Now, of course, in real life, that's impossible. There'll be so many transactions. And so in real life, we need a way of recording each transaction, just make a note of it, but a way such that at the end of the period, the end of the month, usually the end of the year, but at the end of the period, we can easily get the relevant information and produce a statement of financial position, an income statement. But again, at the end of the period, we don't want to be doing it after each single transaction. And so that's the purpose of it. And although in practice, of course, there'll be thousands of transactions, we're going to illustrate with these 10. And ultimately, we're going to do everything. In example 1, we're just going to make a record of each transaction. But then later in the chapter, we're going to take our records and see how we can use our records to produce a statement of financial position and an income statement. So there's quite a lot to do in this chapter, and we'll break it up into several separate recordings. First of all, though, let's record these transactions. We'll assume they're in date order, and we're going to be recording by hand. All I mean by that is, of course, in practice these days, most businesses will use a computer. In the exam, you can't, I'm afraid, use a computer, and also it's important that you do know what the computer is actually doing. Not electronically, but the way the computer is recording. And so we're going to do it by hand as though we're recording each transaction, effectively using a book and a pen. Let's go through. I'll need to talk a bit through the first 1 or 2, but then it'll get faster. And if you're happy with what we're doing, by all means, whenever you like, pause the recording, you carry on with a few, and then come back and check. Transaction A. Christine starts a business and pays in 5,000 as capital. Now, of course, we're writing up the books for the business. And if you remember, every transaction has 2 effects. If there's 5,000 capital, the business will have 5,000 cash. And the other effect, the business will owe the owner 5,000. And we need to make a record of both. And the best way of learning this is to treat cash always as a starting point. We need a record that we've got cash of 5,000. And if we're recording in books, well, when you open a book, there are 2 pages. And so we'll open a book, we'll head up 2 pages, cash. Now, when we're doing it on paper, we represent it by what we call a T account. But this T represents 2 pages. There's a left-hand page, there's a right-hand page. But again, in exams, always as a T. And we'll head it up, cash account. And incidentally, because in this chapter we're going to be doing quite a lot with these accounts, make sure you're opening up reasonably big T accounts, particularly cash. You'll be surprised how many entries we'll end up making. However, with 2 pages in front of us, we need to record that we've received, that the business, remember, has received 5,000 cash. And what we do by convention, we'll do it the same way as everybody else does it. Since we've got 2 pages, on the left-hand page, we'll record all the cash we've received, whereas whenever we pay cash, we'll record it on the other side, cash paid. That if we were the only people in the world doing it, it wouldn't matter which side we used. But since everybody does it this way, we will. The left-hand page, cash received. The right-hand page, cash paid. So with A, the business has received 5,000. So we'll put 5,000 on the left-hand page. And there we are. We have a record that we've received it. However, the second effect, of course, is that we owe the owner 5,000. So we need to make a record of that. And so we turn to another double page in the book. So again, and these T accounts can be slightly smaller in your workings. But again, with 2 pages, we'll add this one up, capital account. And certainly the abbreviation is A/C. And we'll record here, we owe the owner 5,000. Now again, we've 2 pages to choose from. But by convention, and to give us, as you'll see, a very easy way later of checking things for mistakes, we are going to make 2 entries because there are 2 effects. We've received cash, entered. We're about to enter capital. But we make them on opposite pages. So the cash was on the left-hand page because we'd received cash. So in the capital account, we put it on the opposite page, which is the right-hand page. I say there's no special reason. It's simply that it will give us later a very, very easy way of checking we haven't made mistakes. So there's the entry, or 2 entries. There are always going to be 2 entries. That's why it's called double entry. We've recorded the cash, we've recorded the capital. In practice, you would write some sort of description against the amount in each case, in case we needed to check later. However, what we do in exams is quite simply write the name of the other account. What I mean is, we put cash on the 5,000 on the left-hand side of cash. The other entry was to capital, so we simply write against it capital. And similarly, on the capital account, we entered 5,000. The other entry was in the cash account. We write against it cash. We do that in exams simply so that if ever later we need to check anything, where was the other entry for that 5,000? Ah, it was in cash. Finally, to put an entry to say, oh, cash, we're putting 5,000 on the left-hand page, capital 5,000 on the right-hand page. It sounds a little bit childish. And so accountants, instead of talking about left-hand page, right-hand page, accountants call the left-hand page the debit page, always. The right-hand page, the credit page. It comes from the Latin, and although strictly the words mean different things, effectively, for our purposes, debit means left, credit means right. And so similarly, the capital account, the left-hand page is the debit page, the right-hand page the credit. And when we talk about the entry, instead of saying, oh, 5,000 on the right-hand page of capital, we say it's on the credit side. We credit capital with 5,000. We debit cash with 5,000. The abbreviations are DR for debit and CR for credit. And because always the left is debit and the right is credit, we don't bother heading up the pages. You can by all means, but in practice we don't. We all know left is debit, right is credit, and that's what we call them, but we don't actually put the headings at the top of the page. Alright, let's carry on. B. The business buys a car for 1,000 cash. We've paid cash. And so let's make an entry in the cash account, and because we've paid cash, it'll go on the right hand side, the credit side. Credit cash 1,000, we've less cash. The other effect, of course, is we own a car. So open up a car page, car account. The entry will go on the opposite page, so it was on the credit side of cash, the right hand side. We'll put it on the opposite side, the left hand side, the debit side of the car account. Credit cash, debit car, and against it write the name of the other account. Credit cash, debit car. And there we are, we've got a record. C. Buy goods for resale for 500 cash. Well, we've paid cash, so credit cash 500, we've less cash. We need to record the fact we've bought goods. Now be careful here, it can be a bit confusing. Before, when we had goods, we said we had inventory. However, in fact, we keep the word inventory special simply to mean anything we've got left at the end. So, although we've bought goods for 500 here, clearly during the month we might buy more, we might sell some. Well, inventory will reserve for what we've got left at the end of the month. We need to record, obviously, we bought some. Well, as we buy goods during the month, we call it purchases. Now, the word purchase simply means buy, and of course we might buy lots of things, but the purchases account is where we'll record the purchase of goods for resale. So, we've paid 500, I'm sorry. Credit cash 500. On the opposite side, debit purchases 500. We've got a record we bought the goods, and right against it the name of the other account. Debit purchases, credit cash. D. We buy more goods for resale on credit. Of course, we just saw what happened when we bought goods for cash. We credit cash because we've paid cash, and we debit purchases. Well, if we've now bought more goods, fine. Debit purchases again, this time with 600. The total we bought so far is, of course, 1,100. Now, had we paid cash for these, we'd credit cash, but clearly we haven't paid cash. But we need a record that we owe money. And so the other entry, to record the fact we owe money, we'll open an account called payables. Debit purchases because we've bought goods. The opposite side will credit payables with 600. Quite nicely, of course, a common word, an alternative word for payables is creditor. Creditor, we owe money. It's on the credit side. Next, we pay rent of 200. We've paid cash, so credit cash. We need to make a record that we paid rent. We'll debit a rent account. How much was it? 200. Credit cash, debit rent. Sell half the goods for 800. Okay, sell goods, so we've received cash, debit cash 800. To record the fact we've made a sale, credit an account for sales. Now then, some people get very worried that if we've sold half the goods, do we not need to make some sort of record that those goods have gone? For the moment, no. For the moment, all we need to record as accountant, we need to record everything we buy. And in the purchases account, there we are, we've bought goods so far for 1,100. We also need to record everything we've sold, and there we are in the sales account. The sales are 800. We'll worry about how much is left at the end when we get to the end. At the end of the month, then we'll have to check what are we going to do about any goods left. But during the period, we simply record everything we buy, everything we sell. Now, if that worries you, be patient. It's another area we will talk more about later. But in ordinary manual accounting, which is what we're doing, record every purchase, record every sale, and that's all. Let's go back. Next one. G. We sell the remaining goods on credit. Well, we've made more sales, and so since last time we credited sales, let's credit sales again, this time with 900. But of course we can't debit cash because we've not received cash. Instead, we need to record that we're owed money. We'll open an account for receivables. Receivables 900. Nearly there. H. We pay cash 400 on account of the amount we owe. Well, we pay cash, so credit cash 400. But of course we've not bought any more goods. We've paid 400 as part of the amount we were owing, as part of the payable. So of course we owe less. Credit cash, debit payables. Where's payables? There we are. Debit payables. And of course beautiful. On the credit side was what we owed. On the debit side is what we've paid. I hope obviously the difference between the two is the amount that's still owing. I, same thing in reverse. We receive 500 from Mrs. X. Debit cash because we've received money. But again, the money we've received is part of what we were owed, and so credit receivables. Receivables. Here we are. How much was it? 500. Finally, Christine withdraws 100 from the business. Christine, remember, is the owner. Anything she takes out is withdrawals. She's taken out 100, it's cash, so credit cash 100. We'll debit an account for withdrawals. And there we are. Obviously in practice there's likely to be far more entries, but in each case every transaction with two entries, a debit and a credit, it's double entry to record the two effects. Now that has to become automatic. How you learn it's up to you. Paragraph 3, it's headed up General Rules. If you want to learn it that way, fine. Have a read through afterwards and check. I personally think the easiest is always to think to cash. If ever you're unsure about an entry, think what would happen if cash was involved. Debit cash if there'd been a receipt, credit if there'd been a payment. And then sort it out from there. But you've got to learn it. After a few examples, it should become automatic. However, remember, although we've recorded every transaction, what we want to be able to do at the end of the year, or here the end of the month, is prepare a set of financial statements. And so, before we go any further, we need to work out a balance on each account. What I mean here is, if you look back to the cash account, clearly during the month we've been receiving cash, we've been paying cash. Any cash left at the end will appear as an asset on our balance sheet. But of course we need to work out how much cash is left. Of course, no problem, add up one side, add up the other. But get used to a very standard, neat way of working out the balance on accounts, striking a balance. Watch carefully. Now, you may be used to doing it differently at school or at university, but get used to the way I'm doing it here, because although in the exam you're only ticking boxes, it's multiple choice, you'll often see T accounts written up as part of a question, and you must be familiar with the way they'll have balanced it off. What we do is this. You leave a space and you draw what I call total lines. And first of all, you add up the big side. Here, the bigger side is the debit side. If you add up the debit side, the total is 6,300. Now, that's the total we've received. Obviously, we've paid money out and we want to know what's left. And the way we do it neatly is this. We take that 6,300 and we make the other side add up to 6,300 as well. Now, of course, it doesn't at the moment. If you add up those, sorry, let me change the colour. If you add up what we've paid, it comes to 17, 18, 2,200. And so if we've received 6,300 and paid out 2,200, what's left must be the difference. We fill in the missing figure. The missing figure, 6,300 minus 2,200, is 4,100. And that missing figure is the balance on the account. That's how much we've got left. It's the total receipts of 6,300 less the total payments of 2,200. But the missing figure to make it add up is 4,100. Now, of course, we don't show the red items, but that's the neat way that we finish off the account. But we've not quite finished, because although we know there's 4,100 cash left, we've still got 4,100 at the beginning of next month. But that's the net figure of all these debits and all these credits. But the net result is a net debit of 4,100. To finish it, we take the balance we've ended up with and we write it down again beneath the totals. And if you think about it, all we've done there is replace lots of little debits and lots of little credits with the net result. The net result is one big debit of 4,100. That's what we're left with. And effectively, everything above that 4,100, in a sense, we could now ignore. Now, get used to that. Let me do another one, and then I want you to do one or two. But we need to go through, and every time there's more than one figure on the account, we're going to balance off, we're going to replace with one figure. Now, there's no point in doing it for capital and car. There is only one figure there. The balances are obviously credit 5,000, debit 1,000. But look at purchases. Now, the answer may be obvious, but of course, in real life, there could have been hundreds of entries. To balance it nicely, add up the big side, it's 1,100. Make the other side add up to 1,100 by filling in the missing figure. The missing figure is 1,100. That's the balance. And we rewrite it on the opposite side. And again, all we've done is replace two little debits with one big debit of 1100. There's two payables. This time the big side is the credit side, 600. Make the other side add up to 600 by filling in the missing figure, and the missing figure is 200. There's the balance. Write it on the opposite side. And again, we've replaced a credit and a debit with the net result. The net result is a net credit of 200. Alright, what I want you to do is pause the recording, go through and balance the remaining accounts. If there's one figure on it, like rent, simply leave it there. If there's more than one figure on it, like sales, strike a balance. When you've got the balance on each account, I want you to turn to example 3 on page 6. And it says, it's headed up trial balance. Now I'll explain what we mean by the word later, but what I want you to do, head it up trial balance. And when you've worked out the balance on each account, I simply want you to do a list for me. Have two columns, a debit column and a credit column, and simply list the balance on every account. I'll start it. Cash, for instance, we ended up with a debit balance of 4,100. So put 41 in the debit column. Capital, we ended up with a credit balance of 5,000. Well, again, I want you to list every balance, and when you think you've listed them all, add the two columns up. I'll talk afterwards about why we're going to do it. Can you have a go, though, as fast as you can, and then switch the recording back on and check yourself. Okay, well, let's check. Rent, we already know the balance is 200. Sales, you should have ended up with a credit balance of 1,700. And finally, with the receivables, 900. The missing figure, the balance is 400. And there we are. Now let's list them. We've listed cash and capital, so car is 1,000, purchase is 1,100. Payables 200, rent 200. Sales 17, receivables 4. And finally withdrawals 100. Let's add the two columns up. The debit column 41516262, I think 6900, and the credit column 6900. And if you think about it, the two columns must add up to the same. They must, because every entry, every debit and a credit. If the two columns don't add up to the same, then there has to be a mistake. It would be silly carrying on until we'd found the error. Now, if you had made a mistake, if you need to, again, pause the recording or wind back until you found your error. However, if we assume it does add up, then what we've prepared there, as you saw from the heading, is what we call a trial balance. And as I say, the two columns must add up. Now, these days with computers, there's something seriously wrong with the software if the two don't add up. But if we were doing things by hand, there are all sorts of mistakes we could have made, which this trial balance would discover. For instance, when we bought the car, if you look back, the double entry was credit cash, debit car. No problem. But of course, if you were doing thousands of entries a day, it'd be very easy by mistake to perhaps credit cash 1,000 and debit car 100. But if you'd credited cash 1,000, debited car 100, think about it, the trial balance wouldn't balance. You'd know there was an error and you'd look back until you found it. Or another easy mistake, remembering in real life you may be doing thousands of entries. Credit cash 1,000 for the car, turn to the car account and perhaps instead of debiting with 1,000 you credit with 1,000. An easy error, but again, if you'd made that mistake, the trial balance wouldn't balance. The fact it didn't balance, you'd know there was an error, you'd have to go back and look for it. Another mistake. The balance, when we came at the end of the month to work out the balance on cash, we got a balance of 41. But of course, however good your arithmetic is, if there are thousands of numbers, you could easily make an error and get the wrong balance. Don't change yours, but 5-1. Just a simple addition mistake. But if you go back and put 5-1 on the trial balance, it won't balance. You'll know there was an error. You'd have to go back, check everything until you found it. So it's a very easy check, it's a very quick check, but there are lots of potential mistakes that it would find. However, it's not a perfect check. Turn to page 20 if you want, where I've left space. But there are equally plenty of errors we could have made where the trial balance would still balance. For instance, and I will list these in a second, I'll summarise them. The car, we paid 1,000 for the car. However, perhaps the bookkeeper misread and thought it said 100 and entered 100 there and 100 here. Again, don't change yours because that's wrong. But surely, although we'll end up with different balances on cash and on the car account, the trial balance will still balance, because all the trial balance checks is that the debit equals the credit. So if both entries are of the wrong amount, it will still work. A second mistake. The correct entry, credit cash, debit car. But suppose it was completely the wrong way around, debit cash and credit car. Well, again, that's wrong, clearly. But the debit does equal the credit. Sorry, let me write what it should have been, otherwise we'll get confused later. The debit does equal the credit, and as long as the debit equals the credit, the trial balance would still balance. A third error. The car was 1,000, credit, cash, debit, car. But suppose we debited the wrong account. Instead of debiting car, we debited rent. It's wrong. But if the debit equals the credit, then the trial balance would still balance. Now I'm going to mention one more in a moment, but just let me summarise those. Errors that trial balance will not reveal. So on page 20 is where I've left space. If I just list those three we've mentioned, firstly, where the debit and the credit are both of the wrong amount. Secondly, it's where the entry is the wrong way round. And sorry, I don't want to write an essay here, so if you're not clear what I mean, again, play back the recording and listen again carefully. But the entry the wrong way round, instead of debit here, credit there, it was credit here, debit there. The third one is where there's an entry in the wrong account. Instead of debiting car, we debited rent. Now then, it'd be silly to go on unnecessarily, but just one more which could be important. What we call compensating errors. What this is, that car was 1,000. If we credited cash 1,000 and debited car 100, doesn't balance, the trial balance won't balance. There's a $900 error, the difference. But suppose there was another mistake somewhere else, which was $900 wrong, the other way round. What you can have is two or more errors which net off, which cancel each other. Now, of course, the chances of having two or more errors that exactly come to zero is very unlikely. But the reason it's important is in a big company, you might be dealing in hundreds of thousands of dollars, millions of dollars. And if your trial balance didn't balance and it was, just $2 missing, well, $2 is nothing to a big company. It really isn't. They wouldn't be bothered. But the reason they'd still have to check, if it was simply one error of $2, we're not too bothered. But suppose you go to check and that you find an error, but the error is of $100,000. Well, of course, that's important. But it also means that if the final error is only $2, there must be another error of perhaps $999,998. And so the trial balance isn't going to reveal that. If the trial balance balances, you think it's perfect. If it's $1 or $2 different, it's perfect enough. But the danger is there could be two or more big errors where the net result is very small. That's a compensating error. Anyway, we've been through how to record each transaction, debit, credit, debit, credit. Hopefully you understand what the trial balance is and what its purpose is. We'll have a break here, but in the next part of this chapter, we'll take our accounts and decide how from them we're actually going to produce our financial statements. So have a break, but don't lose your T accounts because we're going to use them for the next step.